AI is cool today, and people have predicted that AI will take all our jobs in the next decade. Are you scared for your job? Are you scared for your business? Or nah, AI is not touching the ground.
No, actually, AI helps my business. And in fact, we're actually playing, I've got a skunkworks project going on with AI in natural gas. And so you think about it, these AI data centers use massive amounts of electricity.
Yes.
And so I'm just like, bring it. Let's do this. Like more AI data centers, more natural gas is needed to turn into electricity. So that's something that we did not see coming 5 years ago. That now we're starting to see a little bit of an impact, and we're going to be on the forefront. We're going to be kind of playing around with that. We're not putting all the chips in, but we're definitely looking at AI data centers and natural gas and how those two can play together.
Welcome to the Bricks and Banks podcast, where real estate meets real wealth. Whether you're building from the ground up or stacking your paper to the ceiling, Steph breaks down property power plays and money moves you can act on. From first-time buyers to seasoned investors, this podcast is your blueprint for financial freedom through real estate, business, and investment. Subscribe now. It's time to build your future. This is Bricks and Banks with Steph.
And we are live. Hey everyone, welcome to another amazing episode of the Bricks and Banks podcast. On today's episode, we're sitting down with someone who knows how to turn dirt, rock, and risk into real opportunity. Jace Graham is a fourth-generation oilman, but he didn't just follow tradition. He built his own empire. As the founder and CEO of Rising Phoenix Capital, Jace has acquired and managed over $50 million in mineral and royalty assets, expanded into real estate, private lending, and even hospitality, all while helping investors create real lasting wealth. But here's what makes Jace different. He's not just crunching numbers from an office, even though he's in his office right now. his team takes a boots on the ground approach, and he's mastered the art of turning traditional strategies like the 1031 exchanges and self-directed IRAs into powerful tools for building passive income. In today's conversation, we're diving into the deals that worked, the ones that didn't, and the lessons learned along the way. Jace Graham is the founder and CEO of Rising Phoenix Capital. He's an expert in real estate, oil and gas, and alternative investments. And he's a certified wealth strategist. Jace, you're welcome to the show today.
Stephanie, thanks for having me. Really excited to visit with you today about oil and gas minerals. A lot of people don't know what that is and how you can invest in it. And that's our backbone and what we do. And so kudos to you in the podcast and what you've done. I've listened to a few of the episodes and think that you're onto something by kind of meeting and talking to people that understand their respective industries and really getting down to the nitty gritty. So really excited to visit with you. I'm looking forward to visiting with you, Stephanie, about oil and gas minerals, oil and gas drilling deals, real estate, lending. We kind of do a little bit of all that. It's rooted all in real estate, if you think about it. But kudos to you on the podcast. I've listened to a few of the episodes and think you're doing a great job with bringing on industry experts in their respective fields to kind of uncover and demystify what goes on in those industries. So well done.
Thank you so much, Jace. I really appreciate it. So I titled today's episode, Beyond Real Estate, Unlocking Oil, Gas, and Alternative Investments with Jace Graham. I mean, you're the only one that's going to take us to the oil level. I come from Nigeria, where oil is the major export. So I'm happy to delve into this topic. But before we delve into the questions, what would you say you're trying to achieve by coming on the pod today?
You know, my goal is to educate and teach people about other ways to invest their capital. Most people are familiar with real estate, and there's a bajillion ways to invest in real estate. But most people also didn't know that you could invest in the real estate underneath the ground. And so what I like to do is just kind of educate people. And if I can provide value, that's what I'm shooting for. So I don't have any agenda. I don't have anything I'm pitching. I just want to just give you as much as I can on the topic, and hopefully you're listeners can take that and learn and see if it's something that they may be interested in doing.
Amazing. So let's talk about your roots. Jace, your family roots run deep in oil and gas. You're the Texan oilman, and you're fourth generation Texan in the business of oil. So I'd love to start with your personal side. What was it like growing up around that world? And how did these early influences shape how you see money, opportunity, and risk today?
Yeah, Stephanie, I mean, I grew up in and around the business. I'm a fourth generation oil and gas guy. So my dad was an independent operator.
Okay.
He would go out and raise money privately from investors. He would go out into areas, lease those areas up, and actually drill oil wells, and did that his entire career. So I really got to learn on the shoulder of a giant. Our family was very entrepreneurial growing up. I was, mowing yards, shining shoes, washing cars, it just kind of is part of just in our DNA. But I remember, being with my father out in West Texas, out on drilling rigs that we were, drilling at the time. And what I remember most about all that was just how respectful and considerate and open with the landowners on the land that we were drilling on. In fact, Miss Roxy became like my adopted grandmother. This was a landowner where we were actually doing the development on her ranch. And my dad was just open and transparent, salt of the earth. Like I said, I learned from one of the best, but it has its zigs and its zags, right? I mean, the oil and gas industry, has its ups and downs, just like in any industry. But unlike real estate, where real estate, you could have a property go from you get $200,000 down to $100,000 in value. It's probably not going to happen. In oil and natural gas energy that we plan, oil can go from $80 a barrel to $40 a barrel in a year. So there are some highs and lows. And so we kind of, weathered some of those storms and saw some good times and saw some not so good times. But the main thing that I learned from my father was just stay in the fight, stay in the game, keep pushing on, do what you say you're going to do. And that served him well. And unfortunately passed away in 2019. But like I said, I give a lot of credit to him and his tenacity and his just transparency and just putting a good deal together.
Wow, that's amazing. Did that influence the type of things you studied in school? Like in terms of what you went on to university to study, or how did that change trajectory of your life?
You know what? It's interesting. No, to answer your question directly. So when I was growing up, I started mowing yards. And then by the time I was a senior in high school, I had 2 4-man crews working for me, which were buddies of mine. Which was kind of that entrepreneurial side, kind of doing stuff on my own.
Yeah.
And so I thought I wanted to go into school to be a landscape architect and not in the oil and gas industry at all. And so I went to school and I started that and kind of realized that really wasn't my thing, and kind of transferred into the business school at Cornell University. And that's where I ended up getting an undergrad from, but also had a minor in the hotel industry and in hospitality. So
nice. So what's the strategy? How do you find oil-rich land? What's the strategy for locating this type of assets?
Yeah, well, the United States and parts of Canada are the only places in the world where a landowner, a citizen, can actually own the minerals underneath the land. In every other country, including Nigeria, it's owned by the government. Okay, so it creates a unique opportunity. In oil and natural gas, I use those kind of interchangeably, but in some basins, some areas, it's more oil driven, and others it could be more natural gas driven. And some basins, it's a combination of both. But it's not just blanketed everywhere. There are pockets. There are areas that it's proven. We know that there's production. There's activity, and so that's kind of what we look at. And then with the shale revolution, which is called unconventional. Before it was conventional, now it's unconventional. There's reservoirs all over the country. The biggest one is West Texas, right out. I mean, that's where that pump jack is right there. That's West Texas Permian Basin. It's the biggest one in almost the world. And so you kind of focus in on those areas where there are rigs, where there is activity that you can kind of play off of and underwrite and get an understanding of the value underneath the ground.
So I see. So when you see that type of land, you approach the owners, or do you end up buying the land for yourself?
So again, we do both, but when we're focused on our mineral strategy or oil and gas mineral underneath the ground, we're only thinking about the value underneath the ground. We're not looking at the value on the surface. And what's interesting, Stephanie, is that the minerals, so they say like when you first own a piece of land from the first president that patented to that first settler back in 1850.
Yeah.
That settler owned that piece of land, they said, from the center of the earth all the way up to the zenith in the sky. All rights, title, everything.
Oh, wow.
What's interesting about minerals is I can sell that seller could sell his ranch and then he could keep the minerals. He could reserve them in the deed. And so that means that the surface continues to sell from generation to generation, but the minerals go a different direction based on that family tree. Because they reserved them, you can keep them. And so that's what we do is we find mineral owners throughout the United States. Typically, they're not living on the property anymore because it's been severed many decades ago or reserved. And we go after and try to find those individuals or families or even companies and say, hey, would you like a lump sum today? Or would you like a little monthly check, for a long period of time? And it's some people decide, hey, I want a lump sum today. And that's what we do. That's who we look for.
Wow. So before we go into your best and worst investment kind of deals, what was that thing that pushed you to starting your own company? I mean, you could have continued in the family business anyway, but you branched out to do your own stuff. So at what point did you decide that, okay, I'm going to start Rising Phoenix and I'm going to create a whole new ecosystem for myself?
So I wish I had like a really positive story about it. Family businesses.
I could tell from the long pause because you just paused for a while and you're like,
well,
okay.
Listen, family businesses are complicated.
Yeah.
And especially if communication is not just completely sound. And so, me and my father ended up splitting up. And so, I started Rising Phoenix, out of necessity. It's something I knew I wanted to do. My father wanted to go a different direction with the company that he built. And by all means, he absolutely could do that. And so I left the family business in 2015. Me and my wife sold our house, pulled out as much equity as we could to start the business. And I moved from Dallas down to Austin and spent 2 years kind of raising new capital and kind of just building it from the ground up. And so, you connect the dots looking backwards, but I wish it would have been different, but actually I don't. It's where I am today. But definitely, took a leap of faith, jumped out and started the company, and we've just been fighting ever since.
Did your family see you as a competitor at that point? Because I mean, you're pulling out and you're doing your own thing.
Possibly. I mean, if you consider non-competes in place as being a competitor, I guess you could say so. But that was fine. I got it, and so I went down and I started everything from scratch and new investor base, new approach to the strategy that we had done together, and then layering in real estate and lending and some of the other things that we do that was not core focus whatsoever, and even on the radar. With my father and his company. So we've definitely branched out and we're doing a lot of fun things over at Rising Phoenix.
And I know you mentioned that you started everything from scratch. What was your first deal like? What did you learn from that? And what are the lessons that stick to you till today?
So good question. First deal. I remember my first real estate deal. I mean, I've done oil and gas deals, leases, minerals, since probably 2004. But first, because here's the thing, like when we left,
Rising Phoenix.
we started raising capital for our first mineral fund.
Oh, okay. Oh, I see.
And that takes a while to raise the capital, to deploy the capital, buying minerals all over the country. In the meantime, I looked at my wife, and she was a real estate agent at the time. And I said, babe, we got to make some money.
Mm-hmm.
And so I listened to a podcast from a good friend of mine now, Justin Colby, about wholesaling real estate.
Wow.
And we started flipping real estate while this bigger mineral and royalty fund was kind of building to just make quick money. And I'll never forget, we sent out 10,000 mailers into the Dallas-Fort Worth area. And my wife didn't know it at the time, but I put her phone number on the mailers because I was like, she knows more about real estate than I do. She's an agent. She starts getting calls. She was like, what's going on? Can you do this? This is crazy. And so I was like, just hang in there. And so we got our first deal under contract. It was actually an investor. He was a tired landlord. He just wanted to sell the property. And I'll never forget, we went in and we bought it. He wasn't even there. And we sold it, to somebody that didn't even step into the house and made about $15,000. And I was like, wow, that's interesting. We literally bought a contract and flipped a contract and made $15,000. I can scale that. Fast forward today, we've done over 1,000 of those.
Wow.
Yeah. So I definitely remember that one very well because my wife, number one, was not that happy with me that she was getting all these phone calls. But when she saw that we made a little money, it made it a little bit better. But that was just an interesting thing. And we flip minerals too, the way we flip real estate if we're not buying them for our own account.
So what's the process like flipping minerals? Because I know people are familiar with the flipping real estates, or what's the mineral side of it?
It's really no different.
Okay.
And so if you think about it, if you're going to flip, a mineral, like a double close, same day kind of wholesale transaction in real estate, we do the same thing in minerals. They're just bigger. The opportunities are bigger. And so we run it exactly, since we had so many reps in real estate, we brought that whole process over into minerals, and we're probably one of the best in the industry at it. Wow. There's a lot of big private equity backed mineral funds that are actively looking to pick up as much as they can, but they're not going to be in the trench doing the cold calling, have the acquisition teams like we do. They just want to buy it and just place the capital. It's kind of like the hedge funds in real estate. And so we do it very organized. We use our title company just like you would in real estate as the escrow agent. So the private equity puts their money into the escrow, and then we figure out, we do the transaction, conveyance deeds into us into them. The escrow agent shows them all those documents, and then they release funds, and they never know, how much we make, and we don't want them to. So it literally is the mechanics are just like a wholesale real estate deal, except just it's minerals, and there's a conveyance deed involved.
So talking about minerals, is there a specific type of minerals you work with, or you just do everything under the earth?
No. That's a good question, because a lot of people are like minerals, like silver, like gold, like none of that. We're talking like, 1 mile, 2 miles, 3 miles below the surface. This is only oil and natural gas minerals. Okay. So we don't do anything else. No lithium, none of that. I know there's people that they do that. That's not when we talk about the oil and gas business in the mineral aspect of that. We're talking about the oil and the natural gas that are below the surface, many miles.
Okay. So I know Rising Phoenix has now become more than just an oil and gas company. You've branched into, you started with real estate, and now you've expanded that into hospitality, lending, and so on. So what was your expansion strategy from day one, or is it that the opportunity just came? Did you have the foresight when you were starting the company that, I'm going to do this, and do that, or you just took the opportunities as it came?
Yeah, that's a good question. You can connect the dots looking back. I always look back, right, and say, it makes sense now. But when we were going through it, it was, we knew oil and gas minerals. That's where I came from. So we were doing that, but it was taking longer to get going, i.e. to get paid, at the end of the day. So then we started flipping real estate in the interim to make just short-term cash. And then the mineral fund started happening, and we had this whole real estate company. And then we started building up cash reserves. So we're like, we have cash reserves. What do we do with it? We can start investing it. So that's when we started doing hard money lending and private mortgages. And so it's just like one thing led to the other, and the opportunities just presented themselves. And the way I look, it's all real estate. Everything we do is rooted in real estate. Oil and gas minerals are part of the bundles of sticks that go along with real estate. So it's not like we branched out into a totally separate industry.
Yeah.
It's all real estate, and we just find different ways to play it, but that through stuff that we're originating. And I think that's important. We
Okay.
understand what's going on. We got the ground game. We got the guys picking up the real estate, picking up the minerals. We know who we're lending out to. Sometimes we're lending to people that are buying our houses through wholesale. So we're
Oh,
wholesale flipping to them,
okay.
and we'll provide the
That
hard
makes
money
sense.
lending behind it.
Okay.
We're just like looking at all the different ways that we can be involved in that transaction all the way from start to finish.
Yeah. So what about alternative investments? Because I know that's also a big part of your company. What
hmm
exactly do you guys do in terms of alternative investments?
So alternative investments would be like investing directly in real estate, minerals, things
Okay.
that are not correlated with the stock market or bond
Mm,
market, right? So
okay.
alternative investments are that. So we raise capital. We've got funds, 60 funds, credit investor funds that we raise capital and we go buy minerals. Well, I've got a
Okay.
mineral acquisition company that sources those minerals. So the capital company is raising money to deploy utilizing the operating companies that we have, whether that's real estate or royalties,
Yeah.
which are minerals. So the capital company is kind of that's where we source all of our capital.
Okay. Oh, okay. That makes a lot of sense. Okay, let's talking about some self-directed IRAs. A lot of
Right.
investors hear about that self-directed IRAs, but they don't really know how to use them. They don't even know what it is in the first place. And you've made this a
Mhm.
core part of your business strategy. Could you walk us through it and how, in plain language, can you explain how an everyday investor or if, like a first-time investor can take advantage or leverage this self-directed IRA to access opportunities outside of stock and bonds like you're doing?
Yeah, no. So self-directed IRAs, and it's a Roth IRA
Okay,
that
yeah.
is held with a custodian that
Mm,
can allow you to self-direct it. Okay, so if you
mhm.
have a Roth with, just a traditional Roth over at Fidelity,
Yeah,
they're going to put you in a mutual fund, stocks, bonds, mutual funds, whatever.
yeah.
If you want to invest into alternative investments like real estate, like oil and gas, like drilling deals in oil
Mm,
and gas, like art, I mean, these are all like tangible alternative investments.
exactly.
You would use your self-directed IRA to do that. I've got a great guy. His name's Greg Herline over at Horizon Trust. They're a custodian that does self-directed IRA. They basically hold the money and make sure that you're investing it correctly. Like you can't invest your self-directed IRA money into your own deals. You have to
I
invest
see.
them into
Into
other
other
people's deals,
deals.
but there's always unique deals that are out there that you want to invest in, but you're like, my self-directed IRA can't do that. So you can set up a Roth IRA. I think now the minimum if you're under 50 is like $7,000 a year. So
Mm,
you pay the tax on it, and then when you put the $7,000 into the Roth IRA,
yeah,
you can grow it and grow it and grow it, and then when you take it out, there's no tax on it. And that's the big thing about it, is that
okay.
you can kind of build up this big nest egg, this retirement nest egg through investing your self-directed IRA into good
Without
investments.
any tax implications because you've paid
Yeah,
it upfront. Okay.
yeah, and that's why I think we have a lot of self-directed IRA investors in our mineral funds because they're
Okay.
high yield, they
Mm,
generate good cash flow, they get paid monthly. There's no real, downside risk is commodity pricing, but we're buying where wells have already been producing. So it's not like there's going to be a dry hole or you lose all your money. So it's a safe way to kind of invest your money and then grow it. And then, when you're 65, or if you have some other scenarios, like you can take it out early for education without
okay.
penalty. You can take it out early for first time homeowner down payment
Mm,
without penalty, and you can take it out for medical expenses without penalty. Otherwise, you get hit with a penalty for taking it out early until you're 65. But it's a great it's a great investment vehicle to invest in the oil and gas mineral space for sure.
nice. I would call you the king of diversification because you're living it out. You're moving between energy, real estate, private lending, and hospitality. So when you look at your portfolio, how do you decide what balance feels right in terms of investments and how you allocate funds to the different sections within your company, especially when the market starts getting unpredictable? What's your strategy between diversification in business?
Yeah, we've got the operating companies. Okay. These are the companies with the people doing the thing and buying the assets, whether that's real estate or minerals. What I've seen in my career with oil and gas and real estate is the shoes never drop at the same time. One could be up, the other one could be down. So we like being able to pull and push, move resources over, pull resources away from those two operating companies. And right now, we've pulled out primarily in the acquisition, the investment of real estate. Just right now, with interest rates where they're at, we'll be back in real estate, but right now we're out. Now we're focused really hard on oil and gas minerals while pricing is low with commodity prices. So we like to buy low and sell high. So, being able to see that and have your team built around that to where we've methodically thought through the way our sales team works, to where the way the funnel works, the way the pipeline works, the way the CRM works, the deal stages, the naming conventions, all that stuff are interchangeable between real estate and minerals. And so we can move our sales team or guys and gals over from one to the other, and it doesn't really rock their boat. It's just a different widget. And so having that ability to be able to do that and pivot and utilize your operating companies to take advantage of the opportunity today, to then build the cash up to then invest into more, call it, cash flowing assets that are quiet. And that's where we like to take our money and reinvest back into the minerals that have this cash flow, and it's very quiet. There's no tenants in toilets. We get a check every month from the operator. Don't get me wrong, we like real estate. I like to lend on real estate. I don't have a rental portfolio. We have a private mortgage portfolio as well as a hard money lending portfolio. So I like to be the bank. I don't want to deal with all the headaches and the issues, and all. I want quiet investments. And so that's what we do. Operating companies generate the money. You have to have an operating company to make the money. And then once you make the money, then you can look to cash flowing quieter investments like lending, like oil and gas minerals, to invest to get cash flow.
Nice. That's a very nice strategy. And I like the function of you being the bank. That's just the best way to leverage the resources that you have. Talking about oil and gas, back to oil and gas. Do you fund the drilling process? How does it work? And I know that America imports a lot of oil from Nigeria. So why is America importing oil from Nigeria when you guys are the ones drilling it down there? Are you not getting enough supply for the American market?
Great question. Oil is unique because oil gets produced and it can get trucked, put on a tanker, and it's sold to the highest bidder anywhere in the world. Okay. We are a net exporter of oil now. And so we produce more oil than we can consume and we export. But there could be scenarios depending on the type of oil. There's different types of oil. There's some that are lighter. There's some that are heavier that you make asphalt with. So just depending, where, you could be buying oil, say, from a country like Nigeria, because the pricing's right. Nigeria, it may be cheaper for Nigeria to, push it over to a refinery on the Gulf Coast than it is to bring it from the Permian Basin because somebody else is buying it for a higher price. So oil is kind of a little fluid, no pun intended. But we're not the operator. When I say the operator, we're not Exxon, we're not the Exxon Mobil, we're not the Conoco, the Chevron, Total. We actually buy where they're drilling and developing underneath. We're the mineral owner that owns the minerals, owns the real estate that those operators drill on. And when they drill and they produce a well, they pay us a monthly royalty check, typically about 20 to 25% of the revenue that comes out of the ground gets paid to the royalty owner. So, but we don't have any say in when to drill or not. We just sit back and passively receive that royalty income. We have no drilling risk, no drilling costs. So that, the operator didn't come to us and say, hey, you got to put up your money to drill the well. We get it cost free. And that's why we like this asset class.
Nice. So would you say this is an asset class a beginner investor can get into, or it's more of an experienced person that you assume to get into this field?
Yeah, listen, I think anybody can get into an industry. I don't think you have to be a big investor.
Okay.
I think you need to first and foremost get educated, understand how it works.
Yeah.
There's no MLS or Zillow for this stuff.
Okay.
You have to understand how to underwrite it. And it's a declining asset, meaning it's not like a real estate cap rate that just pays flat.
True.
There's only so much oil and natural gas in the ground, and once you produce it, it's gone. It's not going back. So you just need to understand the underwriting aspect of it. There's ways to do that, and understanding kind of where the right areas to buy. But there's public auctions where mineral owners can take their mineral interests, ranging in size from, I've seen some as cheap as $500 to 50 million in size. So there's auctions where you can go invest in minerals. Again, I would do your due diligence, understand what you're buying, because if you don't, you can really overpay if you're thinking like this is like a real estate cap rate, because the wells can come in very high and then kind of peter off over a 30-year life cycle. But a third of that production could happen in the first 3 years. You see? So it's like it could be, so if you're buying in that first 3 years, you may be overpaying and not realizing that it's going to drop. So you just have to be careful. But I don't think you have to be accredited or completely sophisticated, but there's a lot of private equity chasing it.
Yeah.
A lot of institutional capital coming in.
What about the regulations around it? How do you deal with the regulatory side of things?
I mean, just to be blunt, I mean, the more regulations about limiting the drilling and development, the more money we make. Just think about supply and demand. So if the government, which this government is pro-energy, they are, and you see it, because what happened when this administration came in office, what happened to oil and natural gas prices? They went down.
They went up.
No, they went down. They went down. Yeah.
Yeah, they went.
Because they were like, drill, baby, drill, more drilling. Not that the operators are just completely listening, but more supply hit the market, same demand, and so price drop. Now, if you have somebody saying, let's ban fracking, which would be, I mean, it'd be detrimental to everything that we know as a civilization, because we're just so used to having everything at our fingertips. But pricing would just go through the roof. I mean, it would be out of control to where it hits the normal most Americans is at the pump, at the gas pump. And so if a gallon of gas is $5-6 a gallon, people start to talk about it. And we're not there yet. So it's right now, I mean, I think $70 a barrel is a good place. Everybody can do well. It's not too much for the consumer. Oil and gas companies can make some money, but again, remember, we're buying the real estate underneath. We're not necessarily involved directly with them.
Okay. So what about because with the rise and the acceptability of electric vehicles and whatnot, it's gonna affect the demand for oil. So does that affect you? Are you bothered about this industry space within the next 5 to 10 years?
No. In fact, I'm in favor of it. I mean, here's the thing. Coal was the energy source of the past.
Yes.
Oil is today. Natural gas is the future. There's obviously nuclear is definitely something to think about, but right now it's too dangerous until they figure that out. But you have to think about, like, okay, with all the EV electric vehicles, the Teslas, you name it.
Yeah.
What is, they've got a battery. What has to, you have to charge the battery. Where does the electricity come from?
Water?
No, natural gas.
Okay.
So you're seeing coal-fired electrical plants converting to natural gas. And so more natural gas is being used to fuel the grid, to charge the EV cars. So I think you got to go all the way back up the food chain and kind of realize what's really going on. And listen, natural gas is great. It's clean.
Yes.
Our country is like the Saudi Arabia of natural gas. We've got more reserves.
It's easy to transport because you just use your underground pipes and.
Yeah. Well, now they're liquefying it and putting it on tankers and exporting it overseas. So we are now a net exporter of natural gas, which is very interesting.
Very interesting.
So demand's going to continue to go up, at least in my lifetime, for my lifetime. Just the infrastructure to change all the infrastructure that we have across the United States is going to take decades. You know, think about all the power lines and everything. Just everything is just so. We're not going anywhere anytime soon.
Definitely. What about solar energy? Have you harnessed that bit, or do you think you're going to look into that side of things?
You know, I can't remember if I looked at a study. I think 13% of the energy that comes to the market is done through renewables. Now that's wind and solar combined in there with hydro. So that's 13% of the pie. I definitely can see it increasing some, but it just doesn't put out enough energy to thirst not only our growth in population, but just overall demand for energy. So, and without the government subsidies, with natural gas right now at under $3 an MCF, it just can't, it's not sustainable. Now, when natural gas goes to like $6, $7, $8 an MCF, which is how it's sold, then it can start making sense. But right now, natural gas is so cheap and we have so much of it and it's clean that it's really hard to make solar and wind economically viable without the government subsidies.
Yeah, because I know that even in Nigeria, people try to use solar energy, they try to harness it, but it's so expensive, and you still end up having to use an inverter, having to charge the batteries with electricity. So at the end of the day, natural gas is fueling the whole process. And yes, like you said, it's very expensive if it's not subsidized by the government. And how much of the government is subsidizing these things is, let's be honest. So I see your points. At least in your lifetime, you're safe.
Yeah, I mean, I don't see. Again, I mean, the only one that's out there that could rock the boat is nuclear.
But they're still trying to contain it, isn't it?
Yeah, and so that's the big, no one's touching it because of that. But that would be the only one that I would say that could change. But right now, the way we're looking and where else is the energy going to come from? We've got a ton of natural gas. It's clean.
Yes.
And so we continue to use it.
What about biogas? Because I know here in the UK, it's one of the avenues that they consider. So what's your take on that?
Yeah, I mean, like ethanol, like, growing corn to convert into, I don't know. Again, I think it's without the subsidies, it's really hard to stand on its own. I mean, just think about like how much corn you would need to really, make an impact. I mean, it would be massive across the entire country. So again, I think it's nice to talk about, and it's definitely kind of a headliner, and it sounds green because it's
green energy,
you grow it,
sustainability.
you grow it, but just don't. I mean, it definitely hits the headlines. There's no doubt about it. I mean, it's
a nice buzzword.
It is. But the crowd is fickle. The U.S. population. I mean, there's a big, massive thirst for energy. I mean, think about it. If you don't have a hot shower, you're throwing a fit. If your electricity goes out for 2 hours, you're throwing a fit. Like, just the demand.
It better not go out for 30 minutes, not even 2 hours.
Exactly, right? So
you've talked about your boots to the ground approach. This is basically you being in the field, doing the legwork yourself, and making all the difference. So how would you say that has impacted your securing deals and closing out investments?
it's all how you buy, right? It's how you buy. And so what we like to do is we like to be as close to the deal as we possibly can. And in order to do that, you have to build sales teams. And what I've realized is that, a lot of people think they want to build sales teams, but they don't know how to do it, or they don't stay with it, or there's the accountability, the metrics, all that stuff. So we like to be direct to owners, direct to real estate sellers, property owners, mineral owners. And so we work very hard to do that. And by doing so, Okay. It's definitely, I mean, it's noisy, right? But by doing so, we're able to capture more return because,
Okay.
we're able to cut out the middleman. Does that make sense? So we're not chasing marketed deal flow. We're not chasing the property that's on the MLS. We're trying to buy it direct for cash. We're not chasing the deal that's on the public auction. We're trying to buy it directly from the family that's owned it for 3 decades. So it's definitely a longer game. And just, I think, the biggest thing is like, be open, be honest, be transparent. There's nothing we're hiding. There's no hard sell. We're not, we're here if you're interested in entertaining an offer and providing a lump sum payout, whether that's real estate or minerals, we can provide that. And we can move pretty quickly if you want to work with us. And we'll also show you how we get to our number. I'm okay with doing that too. So it's full kimono. I mean, we're not hiding anything. I think that's just the best practice, period. I'll tell people, listen, I'm buying this house for immediate resale, meaning I'm going to buy it and I'm going to turn around and sell it.
Yeah.
Do you have a problem with that? No, I don't. I don't have a problem. As long as you can get to my price, we can get a price. I don't care what you do after. So I think just being forthright up front with your clients, with your sellers is huge.
Builds trust.
Absolutely.
Exactly.
I mean, that's all we have to rely on at the end of the day.
At the end of the day. I know that not every deal goes according to plan, and listeners will benefit from hearing your story on that side of things. So can you share a story of a deal that didn't turn out the way you expected? What lessons you learned in the process?
Let's only talk about the good stuff. I've never lost a game ever. No, I'm kidding. Yes. Listen, deals can go wrong. I think just being open and honest again with your investor base. We just had a deal a couple of years ago, a drilling deal where we were actually I raised about $4 million in 30 days. A lot of people that I knew, friends, people that I knew in a mastermind. And I believe in the deal. I knew the operator. My dad had worked with this gentleman back 20 years ago, so I knew he was trustworthy. And we went out and we drilled 2 dry holes.
Wow.
I mean, and so everybody lost all of their money, all of it. And that's the thing about drilling deals you have to be careful about, is that you can still have a trusted operator, a good group that's putting the deal together, and still it loses money. And I was forthright when I was talking to my investors about this, that listen, this is one of those deals that we can hit a 3 to 5 to 1 return, but it comes with inherent risk. And so I made sure to really make sure that this is something they want to do. And there's massive tax write-off with it as well.
Yeah.
But we lost our money. It was hard to go back to them and tell them, I'm sorry, the deal didn't work out. So that's one of the ones that, I wish would have gone a little bit differently. In hindsight, like I said, we connect the dots looking backwards. We're going to be rolling out that strategy again. We're just going to be changing in how we do it. Instead of being in 2 wells, we're going to be in probably 20 wells. So we mitigate that risk so that if there are a couple of duds, which there will be, I just know this by, growing up with my dad. He had his fair share of dry holes as well, and had a great career. He just had more successful wells than dry holes, more wins than losses. But yeah. So you learn. I mean, I'm always learning. I don't know everything, and so I think you got to shoot straight to your investors. Let them know when the song's over, it's over, and let me try to figure out a better way to do it next time.
Nice. So what's the mindset shift that helps you to build the people around you? Because the typical word is that your network is your net worth, and it's very pivotal in this type of business you're into. What do you look out for in the type, and what traits do you look out for in the type of people you choose to surround yourself with in business, relationships, and whatnot?
Yeah. I mean, only do deals with people you like and trust. Life is too short to do deals with bad people. And we all get that vibe. We all get that energy when we're around somebody. We're just like, you know what? I don't know. And you need to pay attention to that energy. People give off energy. And the stronger than love and emotion is authenticity. Okay. When you believe in what you say and what you say is true, you give off authenticity, and people can feel that. For me, I realized that I had to get into a room of high achieving people. And so how I did that is I joined a mastermind where when I was in the room, I was like a small fish. And I was in a room where I was like, now I'm in the right room. When you're the smartest guy in the room, you're in the wrong room. You're in the wrong room, man. So I had to go find and I had to go pay to play to be in a room where it scared the hell out of me. I was like, man, these guys are doing big deals. And now fast forward, I've been in this mastermind, Kent Clothier boardroom mastermind, phenomenal mastermind.
Wow.
And I've been in it since 2019. And now a lot of these guys are my close friends. So like, I was like, you know what? I'm going to be friends with all these guys that are on stage and doing this stuff. And so now we're like buddies and doing deals and all that stuff. So, you know, the big things for me are like, you know, do what you say you're going to do. Are you a good father? Are you a good husband? You know, how are you off camera? You know, when no one's watching?
Yeah.
And those types of things, root trust, transparency. I like people that really, you know, are creator mindset versus victim. No one wants to be around the victim. It's always somebody else's fault. I didn't learn enough. Nobody taught me this. Knowing this, ho hum. Like, get out of here. I don't want to be around those people. I want to be around the people who are like, you know what? I may not have been taught, but I'm going to go figure it out. I'm going to go learn. I'm going to go do this. And those are the types of people that grow companies, that build businesses, that have teams that follow them. And that's who you want to be around.
Nice. I just love it because you have to be intentional about the type of people you put in your space because you're basically the sum of the people that you surround yourself with. And like you said, if you're the smartest person in the room, you're in the wrong room. So when you zoom out to the bigger picture, both in real estate and energy, the trend is shifting quickly. From renewables to housing shortages, there's so much change ahead. Where do you see the biggest opportunities for people who want to invest smartly within the next 10 to 15 years or 5 to 10 years? Let's bring the shift in 5 to 10 years.
I'm going to be an old man by then. I think that you've got to like pay attention to the indicators.
Okay.
I think that you need to understand. And so if you want like I said, like right now, we purposefully pulled out of real estate because the current interest rates, but there will be a time to get back in.
Yes.
We really are doubling down on the oil and gas mineral side while prices are relatively soft. It's a finite resource. It's not going to be here forever. And I only see it going up over time as we continue to produce it. So I think you have to pay attention. You can't get too greedy or too opportunistic. Stick with your core. Stick with what you're doing. It may not sound sexy. You know, you may have gone somewhere or listened to a podcast and learned about this and it sounds fun and all that. Stick to your core, especially right now. It's a weird market out there right now. It's just weird. I don't know if you feel it. It's just got a weird vibe going on right now. I think I read somewhere that credit card defaults are up in their highest of all time
right now.
And so there's just some interesting things in play that are going on, even in the world, that for me to start going out and trying to do, you know, just brand new things that look cool and sound cool. I'm going to stick with my core, what we know what to do, which is just ground game, real estate, oil and gas minerals, and raising capital.
So talking about what's cool and what's not. AI is cool today, and people are predicting that AI will take all our jobs in the next decade. Are you scared for your job? Are you scared for your business? Or nah, AI is not touching the ground?
No, actually, AI helps my business, and in fact, we're actually I've got a skunkworks project going on with AI in natural gas, and so you think about it, these AI data centers use massive amounts of electricity.
Yes.
And so I'm just like, bring it. Let's do this. Like more AI data centers, more natural gas is needed to turn into electricity. So that's something that we did not see coming 5 years ago, that now we're starting to see a little bit of an impact, and we're going to be on the forefront. We're going to be kind of playing around with that. We're not putting all the chips in, but we're definitely looking at AI data centers and natural gas and how those two can play together.
Yeah. What about crypto data centers? Because you need a lot of energy to mine these coins. So
it's the same thing, right?
Yeah.
It's the same, you know, quite a bit of supply on the crypto side. I don't play in crypto, but I know it needs a lot of electricity.
And that's good for business. So at the end of the day, this is more about just money for you. So you've built businesses and you've touched families, communities, and you've created long-term wealth, especially for your investors. when you think about legacy, what do you want to do with Rising Phoenix? What do you want Rising Phoenix to represent? What advice would you give to someone who is just starting out and wants to build a lasting wealth that spills into generations?
No, it's good. It's like, why are we doing all this? Well, what's the point? I mean, it's not just to make money. I mean, once you figure out how to make money, that's no longer the motivation. It's just let's go do deals and make more money. Yeah, whatever. For me, I first want to I want to see my team really build wealth, and it's one of those things like, they say like when the mask come down on the airplane, you got to put the mask on yourself before you can put it on your child. Like you got to take care of yourself first before you can help somebody else.
Yeah,
that's how I look at it. As like, if I can take care of my tribe and create generational wealth through what we do at Rising Phoenix, then that is going to cascade into our investor base and the families that are investing with us to help kind of cascade that generational wealth down. And that's what gets me fired up. And so, I want to take care of my people, and I want them to have, phenomenal lives and we use what we have at Rising Phoenix as tools, as ways to get there. And if we do that right, as a tribe, as a family, then that's going to cascade into how we interact with our investor base, how the people that want to do deals with us and all that stuff. So really focusing introspective first, and then letting that bleed out into everyone we encounter. As far as advice, I mean, my initial advice is like double your rate of failure, meaning
fail fast.
Just go, just do it, go. What I tend to see a lot of people do is they're going to get as much education. They're going to buy the master class. They're going to go to the thing. They're going to show up, but they just don't go. And what I've realized is that like, most of what I've learned is by messing up and not being afraid, and now appreciating the process. And so, like, for instance, like if there's a house on fire, some people are going to go up and be like, is that knob feels a little warm? I don't know. Is there smoke coming out? Whatever. I'm like, I've already kicked the door in and I'm in the house. I'm like, all right, there's a fire. We're out of here. You know what I mean? So and I'm not saying that's always the best advice, because, it could be like a bull in a china shop, but again, it's worked for me to where you're in the trench, you're in the arena, you're learning in real time, and, you're applying things, and then you're backing up and saying, hey, that didn't work, and being vulnerable with your team and saying, hey, listen, we tried this, it didn't work. But I definitely think double your rate of failure, go for it. But with investing, I say start small, get educated, start stacking cash flow. Cash flow is king. I mean, that's the biggest thing. And it's not,
cash is king.
It's hard to do. Like, you don't just all of a sudden I got a ton of cash flow. Like, you have to make money in the operating businesses or your W-2 job or whatever it is to then have money set aside to then invest into cash flowing assets. So some people just want to go right into the cash flow. I'm like, you got to make the money. So how can you make the money? And that's important.
Nice. So thank you so much, Jace. That brings us to the second part of the segment, which is the firecracker round.
Oh, okay.
I'm not going to let you go until we get something from you. So in 3, 2, 1, drum rolls. What's one book or podcast that influenced you the most as a business owner?
Traction by Gino Wickman.
Okay.
The book Traction. It talks about like building a system and a process to run your business under. A lot of times founders, they have an idea and they want to, I'm gonna have a meeting, but this is like the cadence, the beat drum. It's the framework. It's the meeting. Here's exactly what's discussed in the meeting. Here's exactly what the scorecards look like. Here's everything. It's the framework that any business, I don't care what it is, from nonprofit to my company to a restaurant, can all use this type of framework to run their business. It is we operate off of it. We've been doing it for the last 10 years. Phenomenal book.
Wow, that's amazing. Basically dropped the gem on us right now. So the next question, what's your favorite productivity tool?
I mean, ChatGPT has been kind of nice. I use a tool called Motion. Motion's cool. What it does with Motion is I can put my tasks or my to-dos into Motion. And then based on a stage, whether it's ASAP, hot, medium, mild, or whatever, it'll put them in the white spaces on my calendar so that I see these things in front of me. And if I don't finish it, it just bumps to the next white space. So I like Motion. You can set a few other things. It's some project management, but Motion's been good to me to stay organized.
So what's the most common mistake you see new investors make?
I don't know. They just get caught up in the hype of whoever's pitching them, and there's just like, he said it's 10-1. I think we should do it. I'm like, whoa. Like, we got to look into this a little more. Like, what's their track record? Like, can you point to actual success?
Yeah.
There's a lot of bad players out there that are raising capital, unfortunately, but and most people they'll believe the hype. And so I think you just need to look at it, understand how the sponsor or the group gets paid. Okay, I think that's important, and just look for track record and any sort of references. But I think some people just get caught too much into just, he said 10-1 and that's what it's going to be, and it ends up being a complete goose egg.
I know you have a lot of win stories. So what's the biggest win you did? Your biggest win deal that made you feel like, okay, this is it. I'm going to continue on this path. This all makes sense. This is why this is worth it. Or was that big deal where you struck gold and you're like, okay, I'm never turning back?
I mean, listen, I run scared every day. I mean, I think you have to. I think
you don't look like it's someone that could be scared.
Well, I think it's important, because as soon as you lose that edge, it could be over. As soon as I always tell my team, I'm a wartime CEO. I'm not good in peace, so it's like, but biggest win. I mean, God, we had a deal that, we flipped it into a private equity shop, and we pulled out $3 million in profit, and we talk about wholesale, and that's wholesaling minerals. That's the exception. I've been in the industry for 20 years, but that was one that happened, a couple of years ago that we were like, whoa. And so now what it's done to our team is that is capable, and it's capable of doing again. And so now we're just chipping away at some additional deals that are getting into that size as well.
Nice. So if you weren't in the oil and gas or real estate industry, what industry would you be in?
High school football coach.
Why? You love football that much?
I don't know. I'm a coach, not a cheerleader. I don't know. Right. It'd be something fun. If you're saying if it didn't have to deal with money, or
I
don't know. Maybe I think I could do well in that space.
Lastly, you had to pick just one: real estate, cash flow, oil and gas, or royalties. What's your pick?
I'd go oil and gas royalties.
Okay.
Because it is cash flow and it's quiet. I get a check every month.
Cash. I
get a check every month. I don't have to deal with anything. The operator sends me a check every month, every month, and it goes into my bank, and I could be anywhere in the world. I don't have to deal with anybody, anything. So oil and gas minerals by far.
Nice. So how can we reach you, Jace? I know that the audience is thrilled to have you on the pod. So how can we reach you?
Yeah, you can reach me on LinkedIn at Jace, Jace Graham. We do have a little, my marketing team put a cool little guide together on 3 ways to start investing in oil and gas without the dry hole risk. You can get that guide at rising-phoenix.com/guide, GUIDE and I think it's pretty cool. It kind of shows if people are interested in maybe how to invest in oil and gas minerals, how you can do that.
Wow. That's amazing. I mean, this has been a masterclass, and I've learned so much. And thank you so much for bringing this line of discussion to the pod today. I'm so grateful, Jace. Thank you for being on the pod today.
Stephanie, it was fun. Thank you.
So there we have it, guys. Jace has basically broken down all that needs to go in for you getting into the oil and gas sector. So do well to watch this episode, take notes, and check out the guide. I'll make sure to put the links in the description, so you can go ahead and click on it. So we come your way again next week. This has been Breaks and Bank Steph, and let's continue to turn knowledge into action and breaks into bank. This is me signing out. Cheers.